Hello, all of you. Here we begin with the third and last class for the ICDS. Okay. ICDS, I would again revise because I feel a lot of repetition is required. And rather than thinking, okay, I will do ICDS later, not being very important, when you are already sparing 1.5 hour class to listen to me, then with me only repeatedly, if you read the material, this material is more than enough for ICDS. You need not refer any other material. Your institute's material also, important things I have covered in this, especially the bold points. But ICDS separately question and answers can be asked, and what has been asked for 5 marks, I'll be solving it. It's very easy question. And one more thing is, ICDS can also be a part of your business head. When they ask you compute the income from business head, if it is related to closing stock, you have to follow ICDS 2. If it is relating to your investments and securities and all, you need to follow ICDS 8. So like that, related items can be covered up there also. Okay. So let us just revise everything in the ICDS. I am revising purposely all this again and again because few things are, which you would and learn so that you score super well in your exam. Okay. So let us start with ICDS third part. Okay, can we have few things in the very basics? ICDS is income computation disclosure standards. There are 10 standards which are applicable to all the SSCs. Only in case of individual and HUF, they are applicable if books of accounts are audited. ICDS, whatever we are studying from 1 to 10, ऐसे है तो ऐसे करना है, all that is applicable only for business head and income from other sources. That is why, see, when I taught you yesterday, last ICDS 8, that's where we ended the class, related to securities and investment. I said this is applicable only if you treat your investment or securities as your stock in trade. Then only ICDS 8 is applicable. Why so? If you treat securities as your stock in trade, you're buying the securities, you're selling the securities, and that is your business head made trading account, opening stock of security, purchase, sale, then you follow ICDS 8. No, ma'am, I'm treating securities as investments, long-term investment as capital asset. Then obviously the capital gain will be taxable in the fourth head of income, that is capital gain. And for capital gain, ICDS is not applicable. So clear? Like this, there are few things which are very important and they are linked. So ICDS is applicable only for 2 heads of income, business head and income from other sources. ICDS is applicable only if you follow mercantile system of accounting. If you follow cash system, for none of the heads, ICDS is applicable. ICDS has got nothing to do with how you maintain your books of accounts. It has to be followed only while computing your business income. From tomorrow, we are starting MAT, and for MAT, the base is your profit as per your Companies Act, as per your books. So MAT is linked with books. ICDS and books, no friendship. ICDS says, okay, how you compute income is important, what you do in your books is not important. So maths ki logic, this is equal to this is equal. So ICDS is not applicable to MAT. If this comes in MCQ without wasting time, you should get marks. ICDS is applicable to AMT. ICDS is applicable to presumptive taxation. When you go for presumptive taxation, 44 AD and all that, you actually take your book, I mean say the profit as per add and less and all that, no term, not the book profit, sorry, you don't maintain the books, but your turnover and net profit. So when you take your turnover, you need to follow the ICDS 3 revenue recognition, take your turnover and on that show 8% net profit, 44 AD and so on. So for presumptive taxation, ICDS is applicable. Okay. So these are all basic criteria and we have finished 8 ICDS, 9th and 10th one we will do right now. 9th one is very important. I'm again saying ICDS which are important is first one. Then your ICDS second one, that is valuation of inventory. Directly ICDS 8, that is related to securities. and then ICDS 9, which we are doing now, borrowing cost. And other ICDs, just pay attention to what are exactly the comparatives, main little small differences. Okay. Any doubt you have, you can ask me here. So here we go now for the introduction. Everything is over. Name. Accounting policies, only point of the difference between the accounting standards and ICDS is accounting standard follows prudence principle, right? Here we are not following the prudence principle. In ICDS, we don't follow the prudence principle. Prudence principle says whatever you can foresee the future losses, make a provision for that. You know, narrow-minded or conservative approach. Provide for all the losses, don't provide for gain. ICDS says losses should be booked only when you incur it. Same way materiality is followed here. Concept of materiality is not followed. That's all. Valuation of inventories is exactly same accounting standards and ICDS, except when there is a dissolution of partnership firm. Okay, in that case, while the partnership firm or AOP or BOI is closing, the closing stock has to be valued at NRP, whether business is continued or not. So if the closing stock is 60,000 and NRV is 65,000, ma'am, cost or NRV, whichever is lower, answer is no. You will have to value the closing stock at the NRV or market value. Whenever in case of partnership firm AOP, there is a dissolution. Maybe same business is dissolved and one of the proprietor is taking over, that doesn't matter. Construction contract, the beautiful part is when you take percentage of the profit on the contract price, in contract price, you have to include the retention money also. And then with the retention money. Secondly, losses are not allowed unless actually incurred. Whereas AS 7 clearly says whether the contract is started or not, whatever is the stage of completion, if there is a loss, now finish off. Recognize or khatam karo usko pura. Ma'am, can we recognize loss into stages 30% and then next year 40 and again 30? Answer is no. Here losses are allowed only when they are incurred according to the percentage basis. Okay, right? So these are all the details for ICDS 3. Then we have revenue recognition. Revenue recognition, one this and one AS 10. These are the two ICDS, dear students, where there is no change in the ICDS and your accounting standard. Revenue recognition is all clear when all goods, risk and reward of ownership is transferred in sale. You can recognize the income. So can I record sales on accrual basis, goods sold on credit basis for 2 months? Answer is yes, provided I don't have uncertainty ki data will pay or not. But ma'am, afterwards, if data don't pay, then bad debt are allowed under section 36 as your expense. But you cannot cancel the sales or reduce the sales if you don't realize the sales. While rendering service, compute the income either based on percentage or on straight line basis. And if the period of rendering the services is not more than 90 days, then definitely recognize it as your income. Only when you complete it. Recognize it as income only when you complete your 90 days. Is this clear? And this is optional. If you want, you record in stages, but they say it's if the contract of service is only 60 days, 35 days, 80 days, crash course, then let us complete the coaching and then recognize the income. When it comes to income, interest, you have to record it on the due period basis. Royalty also, it shall be recorded on the period or some systematic basis. Interim dividend, you recognize in income tax and income from other sources. You all know or not all the dividends are taxable. CDT and DDT is not there now. Corporate dividend tax, dividend distribution tax. And even referring old books and scanners till last year it was there, now not. Interim dividend is taxable when you receive it. Final dividend is taxable when it is dividend is declared. So in short, declared means In a common layman's language, we call it when right to receive the dividend is established. So for financial year 20 and 21, say in 21 and 22, 30th June, AGM was held and they declared the dividend. So this is obviously going to be taxable in 21 and 22. And then disclosure requirement, what all methods we have followed and all. Compulsory percentage of completion method only you have to follow. Tangible fixed assets, so everything is same except one point. I would emphasize and talk about it. First of all, ICDS 5 is applicable for capitalizing the assets which are used for business for long term. Standby equipments and service equipments are also capitalized. Now they can ask you a small question for machine spares in business head. If spares are put in P&L account, are they allowed as revenue expense? Answer is yes. Unless spares are so costly, like I told you, you have a tempo for transporting your goods to all your clients, and you have changed the tires of the tempo, and these new tires are obviously going to give you benefit of the coming 4-5 years. Then even though these are spare parts, tires and all, you need to capitalize in the book. So once again, I'm repeating, machine spares, if they have written off in the P&L account, ma'am, shall I allow or disallow ad list? It is allowed. Nuts, bolts, ye, wo, write it off, no problem. But then machine spares to take you write it off. But remaining whatever it is, that is the major part of the spares which you have changed and the benefit is more than 1 year, you should capitalize in the books. Okay. And while recording the cost of the machinery in the books, this is same given in section 43(1) in the business head. Original cost, add GST if you have not claimed input credit, custom duty, installation, packing, transport, insurance, loading charges, everything till the asset is ready to put to use. Even if you have purchased the asset on loan, till the date asset is put to use, interest also you can capitalize. And in between, small income is there, you know, that trial run incomes and trade discounts and rebate, all that you will minus. If you have purchased the asset from foreign country, if there's a change in the currency and all, so any effect of changes, then you can add or less in the asset itself. Self-constructed asset, whatever you buy. Yeah, this one is important. Here there is a change. Sometimes, dear students, you buy the assets and against that you give shares, debentures or some asset. Then AS10 is saying, if I have purchased the asset in exchange of other asset, that is barter system, then asset purchased would be recorded at cost of the purchase of the asset or cost of the asset given up, whichever is more evident or clear. Income tax is nothing doing. We don't know what you have given, what you have purchased, what is the market value. You have purchased machinery against barter system, but that person must be selling machinery to others also, no? So what is the fair market value of the asset bought on that? That's why I'm doing star mark. If you have missed the class and if you're feeling this revision is helpful, just put all the star marks what I'm doing. Generally, I don't save. I write so many examples every class, but while closing, I remove them. I'll make sure I'm making one more copy and keeping so that I need not do all that again. Chalo. So what it says, fair value of asset acquired between the willing party and in arm's length price, that should be taken as the actual cost. जो भी आपने खरीदा है. Repairing, if there is a future benefit, future economic benefit, then capitalize. And I'd given the example of that, whether you should capitalize in original, like you have increased the RAM ROM of your laptop, or separate, like you have purchased a 3-in-1 and all that. Okay? So here it is not given in the highlights the point, but this point is also different. Spare part. See here, fair market value of asset given up or fair market value of acquired. Here it is all what is acquired. Okay? disclosure requirement is there. AS6 I have explained you yesterday in 3 parts. AS11 and ICDS 6. Effects of foreign exchange for foreign transactions or foreign operations, my foreign branches, or for derivative market, forward, futures, exchange and all. I have given you one flow chart also in the notebook. You want me to revise that? One flow chart I have given you in the notebook. Foreign currency transactions. If you are buying and selling goods, or if you have taken loan or all this, in that case, the forward exchange contract or whatever, first is how do you record it? Initial recognition is the day you purchase and sell and all that, whatever is the currency rate, that is what you record it. Clear to all of you? The date of transaction, when you record it, whatever it is, just record it. Next is conversion at the last day of the year. Now on the last day, you have purchased some goods, or you have taken some loan, or you have purchased anything. Now on the last day, decide, is it monetary items, your data, creditas related, which can be easily converted into cash? Then record it in the closing rate. Closing rate जो भी है वो apply करना है. Yes. But ma'am, I purchased it at the transaction rate that day. $1 was 80 rupees. Now $1 is equal to 88. So if I change this to 88, 8 rupees loss I need to book. Is it allowed as your business expense? Yes. Or otherwise business income? Yes. And non-monetary items is long-term investment fixed asset. Just keep it at its transaction. I have purchased a fixed asset $1 at 80 rupees. Now in March, even if the dollar is 88, I don't bother, because I have not purchased the fixed asset with the intention to sell it. Is this clear to all of you? Next is forward exchange contract. So forward exchange contract, if you are doing it for covering the risk of your business, divide the premium over the period of contract. If you are doing forward exchange just for, hedging and just risk taking, then on the date of settlement, whatever it is, you take the action. For this forward exchange, I have given one flow chart. Dear students, in your notebook, read that. Then we have done government grants. Superb, this is. Government grant, they say in accounts, they say whenever conditions related to grant is fulfilled, you recognize as your income. Income tax act says, okay, if conditions are fulfilled or not, fine. But once grant is received, you cannot postpone the recognition. Grant milana, take it as your income and pay income tax. Now grant received is income, but how do you treat it? Is it related to depreciable asset? Reduce from asset. Non-depreciable asset, defer it, like land and all, you can put over 5 years in the P&L account and so on. If it is not directly related to asset, suppose you have set up a project in backward area and it is 50 crore and government has given you 5 lakh. In 50 crore, 10 crore you have purchased the plant and machinery. So in 5 lakh ka bhi 1/5, 1 lakh you can adjust against the plant and machinery. I hope you have written this example and it is clear, proportionate.
Ma'am, can you just repeat this one?
Yeah, I'll repeat. See, when it is related to depreciable assets. So suppose you have purchased the asset for 10 lakh asset and 1 lakh is the grant. Only on 9 lakh you charge depreciation. Is the first example clear? Now,
yes.
Second, Non-depreciable asset. I gave you example of land. So land you have purchased, and related to land you have got grant, say 10 lakh rupees. Now you cannot do any changes in the value of the land because land value never depreciates. It's non-depreciable. Land ki value to appreciate hoti hai. And in income tax, you are not allowed to do revaluation like you do it in the AS10. So if you have related to land, if you have received the grant of 10 lakhs, then can you amortize it, divide by 5 years, 2 lakh every year? So you can defer it every year over the reasonable period for which you will get the benefit. Now, third one. Suppose I have started a project in the backward area for 50 crore rupees. In that, 5 lakh is the GG, government grant. Now, plant and machinery I have purchased for 10 crore. Okay, grant is for the whole project, no? Okay, you are setting up the project in backward area. So plant, machinery, building stock, सबके लिए ये लो 5 लाख का grant. Now, 50 crore project में 10 crore I have spent for purchasing the plant and machinery. How much grant you have received? 5 lakh. So 50 crore में plant and machinery investment is 10 crore. Is it 1/5? Then here also 5 lakh mein 1 lakh. Can I adjust 1 lakh of the grant with plant and machinery? Yes. Remaining grant 4 lakh you can defer or adjust it according to the way you are using 50 crore. Now clear to all of you. Acha chalo. Isme 5 crore more you have purchased land. So here also accordingly proportionate what you have land ke liye jo kharida hai wo defer karo. In short, here the grant is received not related to any asset. It is related to your capital put in the business. Total project capital is 50 crores. In that, plant and machinery purchased is 10 crore. So total grant received is 5 lakh. In that, how much you can adjust in plant and machinery? 1 lakh. Now tell me, is the example clear? And now,
Yes,
in fact, you can read it also once. Proportionate amount shall be deducted from the actual cost of asset, like this 10 crore mein se 1 lakh, or shall be reduced from the WDV of asset to which that asset belongs. If us, ma'am, we are following depreciation block of asset, not individual plant and machinery. Still, if you have received grant related to plant and machinery, you can deduct it, and on the balance depreciation will be charged. Now, grant is related to expense or losses already incurred. Some losses in the COVID period we have incurred, which we have debited in P&L account, and everything is over. Now what you get grant straight is your business income. See the income. Because this is related to expense which are already allowed in the past. And in any other case, grant shall be recognized as income over the period necessary to match related cost. So in any other case, if grant is received 10 lakh for 5 years, amortize 2 lakh, 10 lakh for 10 years, 1 lakh, like this. How many years you have received and all details will be there. Clear? Right.
is it 10 lakhs divided by 10 years, ma'am? 2 lakhs, how would it come?
This is all there actually in AS, but I think AS is not over, so you all are taking. I'll show you. Suppose 10 lakhs grant you have received for 5 years. 2 lakh every year you will take it in business income P&L account credit side and pay tax on that. Got it? Though
Yes.
at a time, how much grant you have got? 10 lakhs. But how much you will pay tax on every year? 2 lakh, 2 lakh, 2 lakh for the coming 5 years. The more you study business head, no, all these amortizations will be clear to you. VRS also. When my employee is leaving my organization, at a time I'm paying him 3 lakh. Now this 3 lakh at a time I'm paying, but Income Tax Act says whenever you pay VRS, you can allow 1/5 every year as your business expense. 3 lakh you cannot put in P&L account in 1 year. So 3 lakh ka 1/5, that is 60,000 is allowed as business expense every year for continuous 5 years. Like that this is. Now refund of government grant, I said R for refund and R for reverse. While bringing, have you reduced from asset? Now while paying back, add to asset. While getting the grant, have you credited in the P&L? Now you debit in the P&L. So like this, if you have deferred, then put it back, adjust it in the deferred, and remaining put it in the P&L account. Okay. So these are all the compliances for government grant. Ask if you still have any doubt in government grant. It's all revision. Just give me 1 second. Okay. Yes. So this repetition is required, dear students, and I do understand that for some of you still grant and all utna clear nahi hai. So now for that your AS 12 you need to study, and you need to study your what did I say? INDES. So when you will do INDES in the CFR, it will be clear. ठीक है? Chalo. Let us study now ICDS 8. This also we have done. We will just do a brief revision. First of all, ICDS 8 is applicable only for securities taken as stock in trade in your business head, opening stock, purchase, sale, closing stock, and so on. If securities are taken not as stock in trade but as investment, then it will be covered under capital gain chapter, and for capital gain ICDS is not applicable. And then some of the securities which are maintained by banking and insurance companies and all, for them those act are applicable. Right. Securities, when you purchase, you record it with the stamp duty, brokerage, and all. Okay. Right. And at the year ending, securities are to be valued at actual cost or NRV, whichever is lower. Okay. But most important is this point, star mark. Yesterday only you must have done, but if you have missed the point, that cost or NRV, whichever is lower, shall be done category wise. Share is a category, debt is a category, and not for individual securities. Securities not listed on recognized stock exchange or listed but not quoted shall be valued at actual cost. You know, sometimes cost or NRV, but NRV is not available because these securities का कोई listing ही नहीं है या कुछ quoting भी नहीं है ठीक से, right? In that case, it is to be valued at actual cost initially recognized. ठीक है? Right. Next now ICDS current investment to be valued at cost or NRV, whichever is lower, individual investment basis or category of investment, whatever you want to follow. Here security should be valued at cost or NRV category wise. What are the categories? Shares is a category, debentures or debt, convertible securities, and so on. Opening and closing, I said leave it, and FIFO and 2 methods. We'll do one thing now. I have to start with ICDS 9 and 10, dear students. But before that, I have included 2 problems related to ICDS 8, which I want all of you to solve with me in your notebook. एक तो already solved है, देखो problem number 19 and I am on page number 32. Can you all please come? This problem is asked for 5 marks. Very easy, very scoring. Exam में कुछ tough है तो कुछ easy भी तो है ना. All right. See this question. ICDS 8, para numbers and all is okay if you need not know. ICDS 8 on securities held as stock in trade shall be valued at cost or NRV, whichever is lower. However, ICD 8 said that exercise should be done category wise. I want all of you to put category wise in your problem in block. However, the same shall be computed for subsequent measurement of securities held as stock in trade. Securities are first aggregated category wise. Aggregate cost or NRV for each category are computed and lower of the two is taken as the ICDS 8. See how? This is already an example solved. Suppose the first category is shares. Now, in ICDS, what do they do? You know that for every item you take cost or NRV, whichever is lower. That is what you do normally. Cost or NRV is lower. This is what you do in your AS 13. Shares ka cost है 100, NRV 75, तो 75. Whichever is lower, whichever is lower, whichever is lower. So this you will take phi naught phi as your value. I want all of you to write as per AS 13. What is the value? Phi naught phi. Whereas ICDS says all items cost. Do the total. All the items. पूरा category का total करो. Not individual. Script wise नहीं. This is like script wise, no? 175, 120 and all. Don't do script wise. Do it category wise. Whole category cost. How much is it coming? 560. Whole category NRV. How much is it coming? 535. Now, whichever is lower. So, 535. Bolu. Now, is it clear or not? But I know. Exam mein they'll end the question here. This is the answer. Printed with all the presentation and everything. Chalo, let us see the debt one. Cost or NRV, whichever is lower, 125 is lower, 220. So, 585. According to the AS, 585. But now, pure debt ka lower. Whole NRV lower, whichever is lower, which one you will take? 1,5. This is the final total, sorry. Cost is 600, NRV 615. So which one you will take? 600. So AS 13 is saying take 585. Script wise, cost or NRV, cost or NRV. ICDS is saying total, which is actually not right. But dear students, please observe one thing. No books will say, but just observe. If you take script wise, 505. If you take ICDS wise, category wise, 535. Here also script wise, 585. If you are comparing total, 600. In short, in ICDS, always you are valuing your security at high. Higher the closing stock, higher the GP, higher the NP, and higher the tax you pay. ICDS पूरे ऐसे ही हैं. They are trying to take maximum tax from you all. Shall I close this question? Is this clear to all of you?
Script means, ma'am, like, I mean, each share you are saying, or category? Share is one, that is.
Share is one category. So for all the share, what is the cost? 560. For all the share, what is the NRV's total? 535. Whichever is lower, take it. This is ICDS. For the whole category of the share, cost. For whole category of the share, NRV. And in this, whichever is lower. This is ICDS. Whereas if it is accounting standard, in the category also script wise. Script wise means company share wise. Okay, for A company share, 75 is low. For B company share, 120 and so on.
Done.
Are you now getting it?
Okay, clear.
Category wise means category. I will, when I go there, I will again show you. It is shares is a category, debt is a category, securities are the category, and so on. One more problem I have added in the end, and this is not worked out. This we can work out now. This company is engaged and the details of stock in trade is given. Okay. Determine the adjustment required. And now there are different kind of the shares. I think better we do it in notebook. वहां पे क्या था? Number of shares and all only. This is one category only. Category एक ही है shares. But in category script wise or total wise, how you are doing, that we will check out. In fact, it would be a practice. Kabhi kabhi, understanding is not enough. If we practice in the notebook, we can perform better as per the presentation. So let us do it. ICDS 8 in your notebook and problem number. I hope you all have written all these examples. ये मैंने डिवेंचर इंटरेस्ट के लिए बताया था, कम इंटरेस्ट, एक्स इंटरेस्ट, and this I had told you for forward exchange contract. So important points I've made you right. Chalo, ICDS 8 will do. It's for one category only, shares. But we will do everything.
Do the total and we will compare cost or NRV, whichever it is.
But it's not that directly we can take, because the number of shares, this the other problem, the number of shares is not given. The problem which we completed. Here, number of shares of every script are not same, no? Are you getting? One thing, I'll show you how it is different from that problem. Here, we are taking, but number of shares are uniform, assumed. Are you getting? A company के 50 और B company, ऐसे नहीं है. Number of shares is missing. So we have just valued it in the total. Here, number of shares are given. So we can value it. I will solve the problem. It will be very clear to all of you. Do it just with the me way I'm saying. Yeah. Are you all able to see the notebook? Chalo. First, option 1. Option 1, as per AS 13. Cost or NRV, whichever is lower, script wise or each and company's share wise, right? तो चलो साथ में करते हैं. First, divide it into 3 parts. कंपनी के शेयर्स, कौन से कंपनी के शेयर्स हैं? Calculation and amount. Closing stock. First, A company. How many shares are there, dear students? 500. Cost is 50, NRV is 65. So we will take 50. And amount is how much? 25,000. We are in which mode right now? AS 13. Cost or NRV, whichever is lower. 200 shares. 35 or 32? 32. Keep your problem open in front of you, dear students. This is 5 marks problem asked in the past exam. 200 into 32. 6,400. Now, 300 into 110. 125 or 110. So 300 into 110. 33,000. D. 250 into 25. 250 into 25 or 40, whichever is there. 6250. So what is the closing stock in your trading account credit side? You are trading in shares. Cost or NRV, whichever is lower. Script wise. 70,650. 70,650. Any doubt? Anyone in the class? They can ask you this problem for 5 marks for sure, and it's going to be super scoring. Now, as per ICDS 8, cost or NRV, write down this, all this you should write. I hope you're not just doing any shortcut in writing. When I'm writing it, take efforts to write it. Cost or NRV, whichever is lower, category wise, not script wise, category wise. तो अब हम करेंगे, देखो, shares, cost and NRV दोनों करेंगे. A company shares 500 into 50, 25,000 is the cost. 500 into 65 is the NRV. Do for all, double calculation. B company 200 into 35. कितना आ रहा है? 7,000. Here 200 into 32. 6,400. 500 into 65. 32,500. हो गया? C. 300 into 125 is the cost. 300 into 125. 37,500. 300 into 110. 33,000. 250 into 25. 6250. 250 into 40. 10,000. Okay. Ma'am, why we have done for everything cost and NRV now? For the whole category called as shares, what is the cost? 25,000 plus 7,000 plus 37,500 plus 6250. 75750. Now 32,500 plus 6,400 plus 33,000 plus 10,000. 81,900. Now for the whole category, what is the cost? 75,750. For whole category, what is the NRV? 81,200. Whichever is lower. Whichever is lower. So what will be your closing stock? 75,750. Here it was 70,000. Always, you know, as per AS, it will be low. ICDS is saying पूरे category का cost, पूरे category का NRV. Now whichever is lower, take it. So obviously you are taking more than, here it is only 70. Here it is 70. Ma'am, why didn't we work out like this in the last problem? Because last problem shares, number of shares is missing. So we assume that it's just one share and then do all the calculation. Take your time. Calculation mein ghusna nahi hai. You are allowed to use calculator. I want everyone to message me in the chat. Is it clear or not? This kind of problem, will you be able to score marks?
Yes, ma'am. Clear.
Good. Thank you. You know, I always say ki when there is something tough in exam, there is something very easy also. So this is one of it, like kind of the questions which they can ask you. I'm teaching everything also, and I'm emphasizing a lot on the, so you know, listen, you know what is the impact on the business head? In business head, you have taken the closing stock 70,650 as per books. But income tax says, no, your closing stock is 75,750. So business income may, the difference of this, you will have to add in your P&L account. Are you getting? You'll have to add 75,750 minus 7 already in your P&L account. Closing stock is 70,000. Now you want to value it at 75 to 5,000. So you have to increase the business income. That's all for this. Let us now start with ICDS 9. It's one of the beautiful, smallest accounting standards on borrowing cost. Shall I explain it orally in my way and then go to this so it will be clear? One second. Yeah. Can you all see the notebook? ICDS 9 and your AS 16.
Ma'am, notebook is not displayed.
Not displayed. One second. Yeah. Now can you see, dear?
Yes, ma'am.
Okay. Thank you for reminding. चलो तो ये क्या है पता है borrowing cost. Now I'm just explaining the concept in the notebook. Check if you later want to note it. I'll give you a time. तब मुझे भी break मिल जाएगा. But अभी तो just stay here. Now frankly speaking, I'm again and again saying this topic you may not follow 20-30% if you have not yet done your Ind AS or accounting standard. And if I teach everything in Ind AS and accounting, Ind AS I don't know, to be very honest. Accounting standard is on my tips because these all accounting standards are there in Inter. It will take a very long procedure. Still the best gist of the AS and then Ind AS I am giving. Pay attention. What is borrowing cost? You know, this ICDS talks first about qualifying asset. Just listen. Everything is there in your notes. Still, if you feel running notes you want to write, I'll give you time to write. Qualifying asset is asset which takes more than 12 months to manufacture, or it could be your closing stock which takes more than 12 months. Generally, example given in every book is wines. Some of the best quality wines, they take more than 12 months, that fermentation process and all. So while manufacturing, if the stock manufacturing is taking more than 12 months, in the 12 months, can we add on borrowing cost or interest cost to that? Answer is yes. Or some fixed assets, plant and machinery, building, which is taking more than 12 months to get ready. A building is taking 2 years to make. While you make the building for 2 years, you have taken loan from bank. You have issued debentures for making the building. So whatever interest meter is going on, can you add it to the cost of the building and then charge depreciation? Answer is yes. That's what is. With borrowing cost, suppose you have incurred some other cost, like you have incurred brokerage, you have incurred, you have issued debentures. So discount you have given on debentures and all those. Shall you consider this cost also? Answer is yes. Ye bhi capitalize kar do aap, no problem. Capitalize in the books. Okay. Now, the question is, ma'am, if we are capitalizing the borrowing cost, time limit. Till when will you capitalize? Till asset is ready to put to use. Sometimes we construct the asset. We do trial run. Trial run, say if some income comes, we reduce it from the cost of the asset. That is already taught you in other ICDS. And then still the work is going on. Abhi tak commercial production shuru nahi hua. So till the date you start commercial production, you can capitalize. Till the asset is ready for commercial production, you can capitalize the interest. Capitalize interest. This all is given in your material. Till the commercial production starts. No problem. Okay. Now, in between, sometimes if the work is suspended, you know, like for example, you have borrowed the money and you're making a building, but in between you got a notice, stop, metro project is going on nearby and you cannot construct the building for 5 floors. You need to stop at 2 floors. So for 6 work, your work is suspended. Now, if you temporary suspension, I call it. Now, you have borrowed money from market by incurring lot of interest, no? So, what you want is, can you give loan to anyone else? Are you getting what I'm saying? I have taken 1 crore loan from market at 10%, but my work is suspended for 6 months. Temporary, can I give this loan to others who want it? Yes. Will they give me some income? Yes. That income, can I reduce it? Yes. Here they say that income don't reduce from the cost. Suspension income don't reduce from cost. Are you getting or not? On 1 crore, 12 months interest is 12 lakhs, just assume. But 3 lakhs I got as income because sometime this money was not used. I gave it as loan to other company and they gave me 3 lakhs. So accounting standard is saying capitalize only 9 lakh. Income tax is saying no. Income don't reduce from the cost. Income, just tax it. Pay the tax. Take it in the P&L account credit side and pay the tax if the income is suspended for some time. Next is, you can take loan for this qualifying asset in 2 ways. Specific borrowing. You know, sometimes you borrow the money specifically for plant and machinery A. Then add all the interest in plant and machinery A. Plant and machinery A to make you, I have taken loan, specific loan from bank at 10%. So this whole 10% interest will be added in the specific borrowing. Now comes general borrowing. Can we take general or casual borrowing for 2-3 assets A, B, C? Then proportionate we will capitalize. How much money is used for A, how much money is used for B and C? In that proportion, we will capitalize the interest. Now, problems related to proportionate and all, you will solve in FR, in Ind AS, in accounting standards. Income tax mein ye kam ka hai. No suspension. If you have got income credit, keep on capitalizing. Specific borrowing, add interest in that asset. General borrowing, proportionate, you add it. Okay? So these are all the details for your brokerage. Okay? And when will you stop capitalizing? When the asset is ready to put for commercial production. Not for trial run. अब जब तक commercial production नहीं हो रहा है, you can go on capitalizing and adding the interest cost. First, you ask if you have conceptual doubts related to this. Now, when I read it from the material, no, it will be clear. I don't think you need to write all this. There also, I will make you write in the material. Did you get the gist of AS 16? Every ICDS, write the name. ICDS 9 ऐसे नहीं लिखते हैं, sorry please, they are in Roman numbers. And वहां पे लिख दो AS 16. चलो, let us now check this, कि what it is. ICDS 9. Interesting it is, and in fact AS में तो always they ask question on AS 16. ICDS 9 is related to borrowing cost. Okay, this does not deal with imputed cost. You know, like you cannot pay interest on your own capital, equity and preference. You just pay interest to outsiders. So no fictitious interest, please. Borrowing cost and interest cost and other connections, commitment charges, amortization of discount, ancillary cost, financial charges are all included. So in short, borrowing cost may commission and all these charges will also be added. Borrowing costs that are attributable to acquisition, construction, production of a qualifying asset shall be capitalized in the books. What is qualifying asset? Land, building, plant and machinery, or technical know-how, patent, intangible asset, or inventory which is taking more than 15 months to come into saleable condition. You know, we are making a patent, एक formula बना रहे हैं, कुछ innovation कर रहे हैं, so that innovation के लिए research activity is going on 12 months, 15 months. In that making of the patent, whatever interest cost we have incurred, can we capitalize in the cost of the patent? Answer is yes. Now, specific borrowing and non-specific. Specific borrowing, for the purpose of acquisition, the amount of borrowing cost should be capitalized on that date only. Other than specific borrowing, amount of borrowing cost to be capitalized shall be computed in accordance with formula A into B into C. Now they have given this. I don't think you should read it also. Chhod do. A into B into C is like, if you want, I can just give you a formula here. Total loan, write down. Total loan, total interest. Specific asset, how much interest. Total general loan, 2-3 loans mila ke you have taken 110 lakhs loan, and on that interest you are paying 11 lakhs. Now 110 lakh mein se one asset is 70 lakhs. So 110 lakh is the general loan on which general interest is 11 lakhs. So 70 lakhs is one of the asset. Usme kitna? I want all of you to write 70 into 11 divided by 110. Is it 7 lakhs? So 7 lakhs cost you add to this asset. Like this, there will be 2-3 assets. General loan means it is used for 2-3 assets. So proportionately you can add on. I'm here only. I want you all to literally scratch this. In fact, this language is opening pe itna and all, itna in depth. It's a part of your syllabus. So as a teacher, I feel I should give, but honestly, I'm going to delete in the next batch. I'm going to be very honest with all of you. क्योंकि कोई मतलब नहीं उतना opening plus half the value and so on. Just write example and read it again. Just a minute. We have missed some track. So 1 minute, 1 minute. I would like to revise it once again. Recording was not on where we were. Borrowing cost is over, no? What I explained in the brief. Yeah, this example you all have written. Right? Till here you have done. Just brief me, I will tell you. Though just what I have given in the notebook is enough. Cessation or capitalization means stop the capitalization when the asset is ready to put commercially. So write down over here commercially, and when inventory is in saleable condition, that time stop the capitalization. Now let us see the comparative of AS 16 and ICDS 9. AS 16 says that if you have taken borrowing cost, if you have taken loan for qualifying asset and all from foreign country, then exchange difference also you adjust here. ICDS 9 is saying for exchange difference, you have another ICDS, no? AS 11. Don't adjust it here in interest. Okay? Right? And qualifying asset definition is same, 12 months. This one is important. When do you start capitalizing interest and when do you stop? Then first, Income Tax Act says in case of specific borrowing, start the capitalization the day you have taken the loan, irrespective of loan is used from this day or not. But you have taken this loan specially for this specific asset, no? So start the capitalization from the date of loan and stop when asset is ready to use. General loan, capitalization will commence from the date of utilization of the funds, the day you use the funds, and cessation from the date when asset is put to use. Clear to all of you? Once again, the day you start taking the loan till the date you use it commercially, specific borrowing capitalize. General borrowing, not from the day you take the borrowing, day you utilize the funds, and cessation from the date when asset is put to use. Isko karo. Now, capitalization will commence when all the 3 conditions are satisfied. Okay. Here, that is in the books. When actually you have incurred the cost, so conditions are satisfied, then only you start the capitalization. Okay, right? And most important point of difference is In books of accounts or in AS 16, they say if the fund is taken, but for some reason the work is stopped and this fund is idle and you have given it to others and there is temporary suspension of the work and interest you have received, you have given the loan money to someone else, ki, "Okay, mujhe zarat nahi, I have taken bank loan. Anyhow, my meter is going on." You use the loan, you pay me some interest, that interest is reduced from the borrowing cost in AS 16. In income tax, whenever you get that income, tax it. See, interest paid is 15, I will capitalize. But in between, I have received interest 3, so capitalize only 12 rupees. Here they say, forget about everything. Whenever you receive the temporary interest, no, pay income tax on that. Note down this point if you want to note down. For some of you, it's a double revision, just 5 minutes more. Then we'll take up all the question answers also, which are all question answers actually we have already covered in the introduction also. Chalo, next. Capitalization, when it should be stopped, already covered here, when the asset is ready to put to use. That's all for ICDS 9 and last one now, ICDS 10. This whole first page is copy paste of AS 29. If you want, just write R for reading. Only one other point is different, which you need to emphasize on. Otherwise, take care. Just read it. ICDS 10 talks about provisions. When you're very sure you're going to incur some expense, you need to make a provision for that, no? Contingent liabilities, you never record in books. You record it in the footnote below your balance sheet. And contingent gain is future benefit. You have got a huge project and abhi you just got the project, but you're very sure when you complete the project, no, you will earn great. Can you recognize that as income and pay income tax on that? Answer is no. Contingent asset and liabilities are neither recorded in books nor in income tax. Provisions, yes. We make provision for depreciation, provision for bad debt, provision for repairs. So like this, we keep making provisions according to some reasonable assumptions. Then in this ICDs, they are talking about onerous executory contract and all. Frankly, leave it. Then I have talked about reimbursement. This I want all of you to remember. Whenever we make a provision, we need to take care of reimbursement of counterclaim. Now, what is that? Suppose I have incurred a loss by fire 10 rupees. I have to make a provision for loss. But I know that insurance company has verified and insurance company is going to give me a claim of 4 rupees. I will make provision of 6 rupees. In short, counterclaim. If there is a reimbursement, it shall be recognized when it is reasonably certain. Reimbursement will be received and amount recognized for reimbursement shall not exceed the amount of provision. So you should recognize the counterclaim and then make the net provision. This is applicable both in accounts also and income tax also. If there is a plant and machinery, it is destroyed by fire and value of plant and machinery was 50. Can you put 50 into loss by fire? No. If you know that there is this plant and machinery is having insurance and insurance company will give you 20 rupees, better provide only 30 rupees as the loss. Right? So just note down this example if you want to note. Chalo. Next. You need to review the provisions every year. As I said, last 3 years, you have been making 5% provision for bad debt, but there is 0 bad debt in your company. So you can reduce the provision to 1% and if not required, reverse the provision and pay the tax on that. Followed or not? Because while making provision, you have debited in P&L account and created a liability. Now you close the liability and pay the income tax on that. So you need to keep on reviewing the provision. Now, Provision and ICDS is talking about onerous contract. I said cancel it. Onerous, executory, ये सब law में पढ़ते हैं, अभी जरूरत नहीं है. Recognition of the provision. Okay. Provision should be recognized when it is probable, means certain है, you're very sure. Provision for repairs, provision for losses होने ही वाला है. This in ICDS says recognize the provision when there is reasonably certain, and for that best example they are giving is section 43B. I will also talk about it. Suppose I have taken interest from ICICI Bank. March month interest is due but not paid. Due but not paid. But very sure that March month interest I'm going to pay. And we are following which system, dear students, for ICDS? Mercantile system. Ma'am, if interest is not paid, then also interest to outstanding interest. Do we need to book it? Answer is yes, we need to book it. So, interest from ICICI Bank, I have to pay 1 lakh rupees. If I pay, interest account debit to bank. If I don't pay, interest account debit to outstanding. So section 43B says GST and interest. There are some expense. If you make it due in March, you should pay it before due date of filing the return. Otherwise, that expense is disallowed. Am I revising 43B? Is it clear for all of you? फिर से सुनो. 43B is linked with this provision. 43B says any expenses which you have not paid and you have booked it as outstanding. When you book outstanding, smartness is expense to outstanding. Abhi to profit kam kar do, बाद में देखेंगे when. So people may try to misuse, no? So if you have done GST expense to outstanding GST payable, electricity expense to electricity, March month some expenses you have put in outstanding, make sure you pay it before due date of filing the return. Generally, March expenses are paid in April only, but at least before due date of filing the return, you should pay it, right? Even ICDS is saying the same thing. ICDS is saying the same thing. Now read it, it will be clear to you. ICDS is saying, make the provision only if you are reasonably certain that you are going to pay it in the April. In exam, if you remember, so many times in business head, it is given to you. Provision for GST made in March, but payment made in December. Disallowed. March payment you have to make at least by July, September, due date of filing the return. If you are paying in December, that is disallowed. Reimbursement claims are recognized here also. And this clarifies obligations may be enforceable from natural, customary and all. Nothing like that. Provisions is okay, just make a provision if it is absolutely necessary in income tax. Otherwise, no provisions are allowed. I want all of you to write one important point which is not printed in the books, but they are asking. 1 second. No? Yeah, I want all of you to please write 43B as an example, and one more example write down. Provision for bad debts. Generally, bad debts is allowed, but there are cases, whereas in case of banks and all, provision is also allowed. No provision for bad debt, because they know that they are going to incur certain kind of the losses. So when they say provision shall be recognized when it is reasonably certain, they are talking about this. Provision for bad debts allowed. It is allowed in income tax also. Yeah. One more thing, please write down somewhere here, wherever space is there. Provision for retirement benefits. Do you all know that there is accounting standard 15 and some Ind AS also for provision for retirement benefit? Because you are very sure you are going to give gratuity, provident fund, pension, VRS. When your employee is going, you give him so many types of retirement benefit, gratuity, pension, VRS, this, that, all. And for that, how to make the provision is explained in AS 15. Right? So ICDS is saying these provisions not covered in income tax. Income tax, P&L account debit side, if you write provision for VRS, not allowed. When you pay VRS, 1/5 is allowed. So provisions for retirement benefit are not covered by ICDS, not covered in income tax or ICDS. Shall I dictate if my writing is not clear? Provision for retirement benefit are covered as per AS 15 and not as per ICDS. Not as per ICDS. Nice, clear to all of you? Chalo. Next. This we have already talked in AS2, no? That is ICDS2 about the method of accounting. That's what they are talking, that inventory should always be valued at cost or NRV, whichever is lower. Now, some rules they are talking here. Valuation of the purchase and sale of goods shall be adjusted for tax, duty, cess, actually paid, whatever it may be. So when you purchase the goods, whatever taxes, duty, you will add on to the valuation. Inventory being securities not listed or listed but not quoted, okay, shall be valued at actual cost, initially recognized. See, always we are saying cost or NRV, whichever is lower, but some securities, they are not listed. So how do we know their NRV? Or if they are listed, not quoted. Quoted matlab jada trading hi nahi ho rahi hai ki you know what is the current NRV. Then those kind of inventories should be valued at actual cost. Already these points we have covered in ICDS 2 also. Inventory being securities other than above shall be valued at lower of cost or NRV in accordance with the ICDS. Inventory being securities held by scheduled bank, public financial institution shall be valued with ICDS after taking into account RBI guidelines. Banks are governed by Banking Regulation Act, wherein all the guidance is given by the RBI. So definitely, as RBI says, you need to follow for valuation of inventories, closing stock. Comparison of actual cost and NRV shall be done category wise and not each and every item wise. Ma'am, this though we studied in ICDS 8 securities. It's applicable for AS2 and ICDS2 also. If you have finished goods A, B, C, D, E, so all the finished goods cost, all the finished goods NRV, whichever is lower, you will take. Are you clear? This is a repetition of what we have done in ICDS2. And now, taxation of foreign exchange fluctuations. Any gain being computed in accordance with ICDS on account of foreign exchange shall be treated as income, and if there is loss, it should be transferred to the P&L account. That's the gist. Loss as per ICDS, mark to market loss or expected loss as computed in accordance with the ICDS shall be allowed. Some losses are allowed, mark to market loss, that is cost or NRV, wherever required. Okay? Next, for one ICDS 43 CBO, revenue recognition wala. If the value of the contract is not more than 90 days, after you complete the project, you recognize as income. And if it is like over the period, then straight line basis. That's all for your ICDS and other details. Here we complete the portion. Let us quickly scroll through the questions because we have already done them, and major question I've done in writing. Still, if you have any doubt, you can put me questions. ICDS 1 states that This ICDS is applicable only for computing the business income and other source and not for books of the accounts. Is it right? Yes. ICDS is not meant for the books of accounts. It is only to compute the business income. Already this is noted in point 1. Certain ICDS provisions are inconsistent with judicial precedent. Whether judicial precedents would prevail, star mark, very important. What do you mean by judicial precedents? Supreme Court and High Court judgment is saying something different, ma'am. And ICDS is saying something different. Ab kiski baat sune? To whom we should listen? Judicial precedents. You know why? Because ICDS have started in 2016. Before that, if any judicial precedents were there, fine. After that, if they have changed according to the ICDS, then follow the ICDS. Let us read it. ICDS have been notified after due deliberations and after examining the judicial view on the issues covered. Certain judicial pronouncements were announced in the absence of guidance on these issues under the Act or in income from other sources or business head. Since certainty is now provided by notifying ICDS, provisions of ICDS will be applicable to the transactions dealt with from assessment year 1890. Jahan se ICDS shuru ho raha hai instead of judicial pronouncement, because ICDS is giving clarification. But before that, whatever judicial pronouncement says, now here they have not given, but kabhi kabhi isko retrospective effect bhi dete hain, not required for renewal, but just saying. In short, the day ICDS is applicable, after that judicial pronouncements ka koi matlab nahi hai. ICDS has clarified the pronouncement, so ICDS will be applicable. ठीक है? Does ICDS apply to non-corporate taxpayers who are not required to maintain the books of accounts 44 AD, presumptive taxation, NRI and all? Answer is yes. ICDS is applicable for computing business income and other source. Therefore, relevant shall apply to all. If there is a conflict between ICDS and income tax rules, which will prevail? Rules will prevail. Rules and Act will override ICDS. ICDS is framed on basis of accounting standards given by Ministry of the Corporate Affairs and all. However, MCA has given a new set, Ind AS. How will ICDS apply to companies which adopted Ind AS? Okay. ICDS shall apply for computation of income under business head and other source. This is irrespective of accounting standards adopted either AS. Books mein whatever you follow, AS or Ind AS. For income tax, ICDS will overrule. Ind AS nahi chalega, ICDS will. Am I going fast or am I reading correct? Can you tell me? Samajh mein aa raha hai? And then read the language once, just because I have already given. Is ICDS applicable to MAT? Answer is no, because MAT is applicable based on book profit as per the Companies Act, whereas ICDS is applicable as per Income Tax Act. So for MAT, ICDS is not applicable. Provision of ICDS is not applicable for MAT. But yes, it is applicable for AMT. Not applicable for MAT. Why? AMT में हम क्या करते हैं? We take adjusted income tax profit and we add back the section 10AA and all that. So definitely ICDS is applicable. Where provisions of ICDS shall apply to bank, banking company and insurance? Answer is yes. But if those specific acts have different conflict, then follow the act. ICDS 1 provides that mark-to-market loss or expected loss shall not be recognized. Whether similar consideration applies to recognition of mark-to-market gain also? Answer is yes. Same principle. Prudence says if losses are not recognized, gain should also not be recognized. If losses are not recognized, gain should also not be recognized. ICDS provides one
problem number 7. Does it apply even for the banks? and the financial institutions.
Yeah.
Companies.
Again, if you want, I will say ICDS, is it applicable to all them? Yes. General provisions of ICDS are applicable. But suppose if I say ICDS 8, what is ICDS 8? Securities. For securities, the banking RBI guidelines is saying something else. Bank investments, Anna, you pay the tax like this. Then ICDS is not applicable. For insurance companies, okay, they have those unexpired risk reserve and all. So for them, provision wala ICDS 10 will not apply, because insurance company saying forget about ICDS 10, you are RKL 50% fire insurance and all, you have to make the provision. So once again, are ICDS applicable to bank, insurance, electricity, power sector and all? Answer is yes. But if those act have specific guidelines, follow that. And the reason is final accounts of banks are not prepared as per Companies Act. They are prepared as per the Banking Regulation Act, and those, that's why. Now is this clear?
Yes, ma'am, clear.
Okay. Eighth one we have done. Eighth one is very simple. I would again recollect. Mark to market loss means prudence losses are not allowed in income tax. So prudence gain also we will not recognize unless you receive. ICDS 1 provides that accounting policy should not be changed unless reasonable cause. Is reasonable cause defined? No. That you need to just check the concept, go into the facts and check it. Which ICDS would govern the derivative market, forward, exchange and all? So ICDS 6, that is AS 11. Did I talk? In ICDS 6, did I talk about the derivative market का अगर किसी को नाम ही नहीं मालूम तो लिख दो यहाँ पे forward, futures, options. Did I talk AS 11 third part? One was foreign operations, one was foreign transaction. So ICDS 6 is providing guidelines on accounting for derivative market as forward contract. For derivatives not within the scope of ICDS 6, one will be applicable. ठीक है? Whether recognition of retention money, receipt of which is contingent on satisfaction of certain performance criteria, is it recognized as revenue on the billing? Is it taken? Answer is yes. Retention money is a part of contract revenue, and when you take percentage of contract, you are taking. Your contract price is 5 crore. Retention money which you are not going to receive till end is 1 crore. You are not going to do 4 crore ka percentage. Percentage will be on 5 crore only. Is this example clear? Check it. Since there is no specific scope for real estate developers, build, operate, transport, you know, those who makes highways and toll plazas and express highways and all, revenue recognition इनके लिए क्या है? मतलब they don't come anywhere. Please clarify if ICDS 3 and 4 should be applied for real estate and all, or yes. Till no specific ICDS is there, you need to apply ICDS related knowledge, whatever is applicable here. Real estate is not covered like revenue recognition and all specifically. तो जो general है वो follow करो. Conditions of reasonable certainty of ultimate collection is not laid down for taxation of interest royalty. Whether taxpayer is obliged to account for income even when collection is certain. Generally, all these income are taxable on due basis, and still if there is a doubt कि interest मिलेगा या नहीं, then we can show it as bad debt, no? Interest accrues on timely basis. Royalty accrues on contractual basis. Subsequent, if there is non-recovery, you can always cover it under 36(1). यहाँ पे लिख दो bad debt. But recognize the income, no? And act will prevail 43D rather than the provisions. ICDS is just have an idea of these questions, you will be able to answer the treatment. ICDS is applicable to revenue which are liable to tax on gross basis. Yes. All incomes are taxable always on gross basis, something very basic. ICDS 5 states expenditure incurred on commissioning of the project, including expenditure on test run, and all shall be capitalized. It also states that expenditure incurred after the plant has begun commercial production should also be capitalized. Yes. What should be the treatment of expense incurred after the test run? After the test run also and before the commercial, keep on capitalizing. I clarified this. Expenditure incurred till the plant has begun commercial production should be capitalized. This is AS10. Asset cost should be capitalized till it is used for commercial production. Trial run ke baad bhi. What is the taxability of opening balance of foreign currency? You know, there is some balance in foreign currency translation reserve. If it is pertaining to exchange difference on monetary item, see, monetary item, they said no, recognize in the P&L account. Non-monetary hai to continue the foreign currency translation. So they are saying the day ICDS started, in foreign currency translation reserve, if there is any reserve related to monetary items, your data, creditors, then take it into income and expense that same year. Read it at home, please. I'm literally not reading. For subsidy received before 1st April, but not recognized in books pending satisfaction or related condition and achieved, how shall the same be recognized? Immediately. Now this big answer is given, but gist is before 1/4/2017 ICDS were not there. So they said recognize the subsidy subject to satisfaction of condition. All conditions related subsidy are satisfied or not? Yes. Work is started or not? Is subsidy. Now ICDS is clearly saying for government grant and subsidy, receive no, pay the tax. So how will you recognize? Just if you receive, but if the subsidy is already received prior to 2017, it shall not apply. But this is a view provides that government grant shall not be postponed beyond the due date of actual receipt. After 1st April 2017, when ICDS are applicable, whatever you have received, just take it as your income. Okay. Next is, if taxpayers sell security on 30th April, interest paid, this come interest and ex interest concept, you remember? If interest is already taken on accrual basis, shall be taken into account for computing income from sale. Means when you receive the interest in ahead, pre-acquisition interest should be deducted from cost of investment. I have explained it with an example in yesterday's class. Check it. This question is over. There are specific provisions for borrowing cost may get disallowed. Oh, very beautiful discussion is, huh? Listen, this 20th question I want to explain orally. Just 5 minutes and we will close the. Yeah, acha hai, dekho. Did you understand borrowing cost related ICDS 9? It says interest cost should be capitalized from the day you borrow the funds for the asset till the date commercial production starts. Keep on capitalizing interest. Sometimes interest is disallowed in the business head. Why? You paid interest outside India and you missed deducting TDS. Or you paid interest above 10,000 in cash. Or you paid interest to relative, which is. So for some 40 business head wale reason, interest is disallowed. Then also should you capitalize as per ICDS 9? Answer is no. If interest is allowed, you capitalize from the date you borrow till the date of cessation. But if interest is only disallowed as expense, TDS katna bhul gaye, interest is not allowed as expense. Unreasonable payment of interest to relative, not allowed. Interest paid in cash, 15,000, not allowed. When that expense is not allowed, can you capitalize it in the books? Logically, no. I have explained you the answer and now check it please here. Since specific provisions of Act override ICDS, it is said that borrowing cost should be capitalized shall exclude borrowing clause which is disallowed under the specific provisions of Act. If borrowing cost is only disallowed, how you are going to capitalize? Capitalization of borrowing cost shall apply for the portion of borrowing cost which is otherwise allowable. Routine borrowing cost, capitalize. If borrowing cost is disallowed, don't capitalize. Bill discounting and other charges, are they capitalized? Answer is yes. How to allocate borrowing cost to general? Asset to asset basis. 2-3 assets के लिए general borrowing proportionate basis. ICDS 10, what is the impact containing transitional provisions? Okay. Transitional provision means if there is a change in the provision. How do you recognize? Opening provision 3 crore. Provision as per 17-18 5 crore. Total provision 8 crore. Already 2 crore provision recognized in 17-18. Now how much provision you recognize? 6 crore. ये देखो. Opening provision 3 crore. During the year 5 crore. Total 8 crore. Already 2 crore you have put in PNL. How much more you need to recognize? 6 crore. Just put it in T format, it will be clear. If you want, you can write it. And then last one I have made you write. Many times post-retirement, we make provision for gratuity and all as per AS 15. Are they covered in ICDS 10? Answer is no. It is clarified that provision for employee benefit which are otherwise covered by AS 15 shall continue to be governed by specific provisions and are not dealt with by ICDS 10. And the last one, ICDS requires disclosure of significant accounting policies and ICDS requires specific disclosure. What is the taxpayer required to make specific disclosures in the ICDS? Net effect on the income. Disclosure of policies so you should do. But any ICDS, what is the impact on the profit because of ICDS that you need to disclose in your return of income and even in your tax audit report? This all I have told you in the beginning only. And last problem we have already solved. So here we come to an end for ICDS classes. Back questions may the information which is there that is missing in the ICDS. Like AS 15 provisions are not covered by ICDS 10. Like that, very nice questions they are. Just revise it. Any doubt you have, click the picture from your material and send me the doubt. I'll surely clear. Give me 24 hours time. That's all for today. Don't miss the classes for tomorrow. We are starting with very important and compulsory ask questions so many times in question number 1, assessment of companies, and that is math. Okay. Thank you so much. Bye-bye.